When you run an online business or a location-independent business, especially if you live in different countries or even outside of your home country, one big question that many people will have is, where does your company actually have to pay taxes? And there are many misconceptions about this. Many people think that the company will always just pay tax on wherever it is registered, meaning that you can just set up your company in a 0% tax jurisdiction like the Cayman Islands or the UAE and pay 0% corporate tax. But this is usually wrong, because corporate residence, i.e. where your company is actually tax resident, i.e. which country actually has the right to tax your company, is actually a much more complicated concept than what many people realize. So in this video, I will unpack this quite nuanced concept of corporate tax resident, i.e. where does your company have to pay tax, so that you will know where your company might have to pay taxes, which, by the way, might be a totally different country to what you think, which means you, as the business owner, have a responsibility to understand these things if you are an international entrepreneur. So let's start. First of all, let's just cover some basics. What is tax residence? So in general, tax residence simply means which country has the right to impose its tax rules on you. And there's two separate things here. There's personal tax resident, where you personally, you the person, tax resident, and where is your company tax resident. Now the idea here is kind of the same, whether the person or the company should normally pay its taxes in whichever country it resides or lives in, or in the case of a company, where it essentially operates. For people, this is often much more simple, because you, the person, can physically only be in one location at one given time. So often, not always, often countries will simply apply what are called days tests. So they will say, for example, if you spend more than 183 days in the country, they will deem you tax resident in that country. But in the case of companies, this can be much more complicated. So that is what we're here to unpack. So before we go further, a few disclaimers. Number one, this video is not tax advice. I have no idea what your personal tax situation is for your specific situation, so do not take this as tax advice. And number two, there are exceptions to all of these things. This is an extremely complex concept that always depends on the specific laws of the specific countries that you are dealing with. What I'm simply going to cover is the general situation. How do these things generally work? Because often the way countries have defined these things are very similar. So how do you define where a company is resident for tax purposes, i.e. which country has the right to tax that company? So in the case of a traditional business, this is often very simple. Let's say you are a restaurant, like the restaurant down the street here in Bali that we just ate at earlier today. That company obviously only operates in Indonesia. So it's very easy to determine that Indonesia is the country that has the right to tax that company. But nowadays, with internet-based businesses like my business that you can simply run from your laptop, it is not always as easy to determine where a company operates. So countries have essentially defined certain laws and certain definitions on what it means for a company to be operated from some place. So when you look at the corporate tax laws of most countries, there are three factors that are usually going to be important. Number one is going to be what's called management and control. The second one is going to be something called permanent establishment. And the third is going to be the place of incorporation of your company. So let's go over these in detail. So to get started, as an example, let's just look at the corporate tax law of the UAE, the United Arab Emirates, because that's the country where I am a tax resident and where my company is tax resident. We can see here that scope. Corporate tax will apply to, number one, all businesses and individuals conducting business activities under a commercial license in the UAE. So points 1 and 2 essentially refer to companies that are registered in the UAE. So in the case of a UAE, all companies registered in the UAE are actually tax resident in the UAE. We'll cover this in more detail later on in the video. But then in here we have number 3, foreign entities and individuals only if they conduct a trade or business in the UAE in an ongoing or regular manner. So this is essentially defined. If a foreign company operates regularly from the UAE, they will be tax resident in the UAE. And you might be telling me, oh, but Thomas, that is so vague. What does that even mean? These things are not always very specifically defined. In the case of personal tax residence, often things are quite precisely defined. For example, in many countries like Indonesia, it's a very simple test. Do you spend more than 183 days in that country or not? Very easy and objective to determine. With corporate residence, it is often a lot more nuanced and a lot more subjective. If we look at the law in more detail, in the case of the UAE, for example, you can see here definition of what is a taxable person, i.e. what is a company that is taxable in the UAE. We can see 3B in here, a juridical person, which just refers to a company basically, that is incorporated, established or otherwise recognized under the applicable legislation of a foreign jurisdiction. So that's just legal speak for a foreign company registered outside of the UAE and is effectively managed and controlled in the state. So this takes us to the first important thing they will usually find in the corporate laws of most countries: effectively managed and controlled. So usually what this essentially means is that the place or the country where the highest level of decisions of that company are made, like the key decisions on how to run that business, that is where the effective management and control of that business is going to be, and therefore that is where that company is going to be tax resident. And that might be different from where like the day-to-day activities of that company are based. You might live in the UK and like effectively as the manager, as the director of the company, make all the decisions about your business, but then you might have an operator who actually goes and executes the plans, who actually goes and runs ads or creates the products or writes the code for your app. Based on these definitions, that company might still be tax resident where you are, in this case the UK. But there are other countries where maybe it's not based on the management and control, and it might instead be paid based on where the day-to-day decisions are run. So again, this really depends on the country, but usually it's going to be based on the management and control. The second important concept in corporate residence is something called permanent establishment. So we can look at the UAE law again here, just as an example on how they define what a permanent establishment is, which is largely similar to how other countries define it, but it might be different based on your country. So you want to look at the specific laws of your country. We can see here Article 14, permanent establishment. So a non-resident person, so this is a company that is not deemed to be tax resident in the UAE. So perhaps you don't have management and control in the UAE. They will be deemed to have a permanent establishment in the state in the following cases: if it has a fixed or permanent place in the state through which the business or non-resident person or any party thereof is conducted. So if you have a fixed place, so let's say an office or your home office even, where you regularly do business for that country, that will constitute what is called a permanent establishment. And there are a few other cases here. If they habitually exercise an authority to conduct business or business activity in the state, or if it has other form of nexus, which again, we could get into what a nexus is, all this. But basically, if you have a fixed place of business in some country for your company, that will constitute what is called a permanent establishment. And then basically, at least in the case of the UAE, any income attributable to that permanent establishment, so any income that is derived from that permanent establishment, will be taxable in that country. So let's say you run your company from Thailand for 5 months of the year, assuming Thailand has similar rules like this, presumably the income that you generate from those 5 months, if you are the sole operator of that company, in this simple example, would actually be technically taxable in Thailand. Now, this is again a difference between what is technically taxable in that country and in practice, are they going to enforce those taxes, things like that. But that is how it's going to work. So basically, based on permanent establishment rules, even if you have a company registered somewhere else, but if you run that company where you have a fixed place where you habitually do business for that company from some other country for a significant amount of time, most likely that will constitute a permanent establishment, which will actually mean that your company, or at least the income that you derived from that permanent establishment, should actually pay taxes in that country. But the third thing to consider is going to be the place of incorporation of your company. So it might seem like I'm contradicting myself here, because I just said earlier that a place of incorporation is not necessarily where your company is taxed, but it does still matter a lot of the time, because in a lot of countries, for example, the UAE, if you again look at the law of the UAE, you can see that one of the conditions based on which a company could be taxable is if that company is registered in the UAE. Now again, that does not mean that the company cannot be also taxable in some other country, but basically any company you form in the UAE will be tax resident automatically in the UAE, even if you don't manage and control that company or have a permanent establishment for that company in the UAE. But there are many countries where this is not the case. So again, it really depends. For example, Hong Kong, at least historically, has been a very popular jurisdiction to form companies because Hong Kong does not automatically tax all companies that are formed in Hong Kong. And there are other specific business structure. For example, a structure called the US LLC. So the LLC company formed in the US is not taxable in the US if you don't run it from the US, or if the person who owns that LLC is not what's called a US person, so not a US citizen or a US permanent resident. So how do we bring all of this together? Well, in most cases, to avoid a bunch of complication, what I would simply recommend, have one residence where you personally have a tax resident, and then you essentially claim that your company is also tax resident in the same country where you are resident. And of course, you probably want to choose that residence in a place that is low tax. And then you simply make sure that you don't spend too long in any other country to trigger personal tax residence in any other country. And therefore, you can probably claim that if you're not a personal tax resident in some other place, then your company is not either tax resident there, because you can just say that, well, the management and control of my company is where I am tax resident, which is going to be your low tax jurisdiction. This can be, for example, the UAE, which is a popular one, and there's many other ones. And in terms of where you should form your company, there's sort of two cases. Number one is you can form it where you are resident, and you should do this if you are resident in a place that has good business infrastructure. For example, if you're a resident in the UAE, you should probably just form your company in the UAE, because you probably need to do it anyway to get residence there, but also because UAE has good banking, it has good business infrastructure, is trusted, things like this. Dubai is an excellent place to live for entrepreneurs specifically. A lot of great networking, obviously no personal taxes, and only 0 or 9% corporate tax, where it depends on if you're above or below what is called the small business threshold. So essentially, having a personal residence in the UAE with a UAE company is the simplest way to avoid all the complications that might come up in many other cases when it comes to corporate residence, because your corporate residence and your personal residence is simply the UAE, as long as spent in most cases at least 90 days in the country. And if you're looking to set up a UAE company and or move to the UAE personally, they actually have a team down below that can help you through the process. That can take as little as 2 weeks, so you can have everything set up in just 2 weeks, and you can get a free consultation with my team down below, and they can answer all of your questions when it comes to taxes, residence, the process, everything like that, and then you can move forward with the process if you want to. And the second case is that if you live in a country where you perhaps don't want to have a company, like for example, if you were to live mainly in Indonesia, you probably don't want to have an Indonesian company as your main company. In those cases, most often I recommend what is called a US LLC. Why do I recommend a US LLC? First of all, because the US is not going to tax that LLC if you are not a US citizen or a US resident. And number two, it gives you access to the US business infrastructure, like US banking, US Stripe, things like this, and also the legitimacy of having a US company. And so you can run that US LLC from wherever you want, and then simply worry about the corporate taxes in the place where you are resident. And if you want to know how you can set up a US LLC very, very easily as a non-resident of the US, then you can watch this video right here, where I go through the step-by-step process on how to set up a US LLC from anywhere in the world. So watch that video next. I'll see you in the next one.